Hello, amazing forex traders. This is your boy Pascal Fonchuk, Avalanche FX Trading Academy. We are here with our LionsEdge FX trading strategy. We are looking at GBPUSD, that is Great British Pound, to traded against US dollars. So we are on the weekly time frame. On the weekly time frame, we've seen price has been on a consistent trend of a consistent downward trend. You see lower lows, lower highs, lower lows, and now lower high. So I want us to take note of this on the weekly time frame. Look at this here. Well, I've really indicated this low right here. So we'll indicate this high. Okay. So up until price breaks above this high, it's still on a downtrend, overall downtrend. So whatever is happening in the internal structure, this move, this is an internal structure move here. Price came down to this level and now it's been rallying upwards. Even though this point is quite interesting, we'll get to this point. Okay, I want us to take note of this point. What do we notice here? Price is ranging here. Okay, it hasn't broken above its previous high, but it got to that point and it began ranging. If price ranges at a certain point, there's a high probability that it wants to go downwards or break upwards, depending on what exactly is happening there. So we'll put this in a box of liquidity. A box of liquidity. Watch and learn. Consolidation box rather. It's in a consolidation box. We'll observe this. So we go straight away to the daily time frame. What do we notice? Price has been ranging here for over, how long has price been ranging for? Look at this. Wow, interesting. Price has been ranging here for over ever since Monday, May 5th, 2025 to Thursday, July 23rd, 2026. My goodness, that's for months now. May, June, July, August, September, October, November, December, January. My goodness, it's over a year. Okay, so our trade is going to be within this internal structure. We'll go straight away to the 4-hour time frame. Start looking for positions within this range. Okay, within this range, what do we notice? What do we notice here, guys? Look out, look out. We notice price has formed. It's a high, a low, a lower high, a lower low, another lower high. Okay, is that correct? Very good. What do we do with that? We start looking for our entry positions. But what do we notice right here? It's formed like a double bottom. Okay, price has formed a double bottom right here. I want to make it as easy as possible for trend line traders to understand. Okay, let's say we put a trend line like this. Okay, even though these are arbitrary lines, they mean nothing. Other than that, they give you a clearer perspective of the direction of the move. Price, they don't really define structure, because structure is highs and lows, highs and lows. Now we see this is much more like a downward channel. This was a high right here. Okay, let's take out, let's use a green line. It's a high here, and this is a low here. And now price has tested this downward channel support, rallied up, tested the resistance, come back, tested the same level as the support, formed a double bottom. And when price forms a double bottom, there's a high probability that price is rallying upwards. So we see it has gone upwards, and there was a previous high. See, price, look right here, price came down, price action, price came down, lower lows, lower highs, lower lows, and now a higher high. This high is higher than previous high. That's a break of structure to the upside. Day trading, simple. Look, break of structure to the upside. Very good. We are diagnosing the market. Diagnosing. Okay. So what do? We notice the momentum upward push that broke this structure came from this point. And at that point, we see an imbalanced demand zone. Wow. Imbalanced demand zone. Okay, good. That's an imbalanced demand zone right there. On the 4-hour time frame, we go down straight away to the 1-hour time frame. What do we notice? We can fine tune that demand zone to this. Go to the 30-minute time frame. You see the demand zone is better fine tuned. Good, good, very good. Oh, it's finer. It's finer. It gets smaller with each downward time. Very good. So our expectation or our bias is that price will come down to this demand zone, and once price tests this demand zone, we enter our position, the long position. Those who are risk adverse or favor risk, you can set your buy limit order with your stop loss below previous lows rather. If you want to be very, oh, just at this point, fine. Okay, then we take profit right here at previous high. That's a risk to reward ratio of 1:30. Well, let's say we put our stop loss here. Okay, because I was like, it's still a risk to reward ratio of 1:7. That's massive. Our stop loss is 23.6 pips. Our TP is 166.1 pips. Okay, so if you're risking 0.5% of your account on this of your portfolio in this trade, your profits are going to be 0.5% times 7. Okay, 0.5 times 4 gives you 1%. 0.5, how many 4s do you have in 7? You have 1 4, that's 1% profit. No, 0.5 times 4 gives you 2%. I was thinking of 0.25. 0.5 times 4 gives you 2%. That's already 2% of your portfolio. Now you look at the next 4, 7 minus 4 is left 3. The other 2, 0.5 gives you another 1%. That's 3%. 3.5% of your portfolio increase. Wow, look at that. Look at that. Those who risk 1% of their portfolio would have 7.04% of their portfolio as profit. Meanwhile, if they lose just 0.5% or 1%. That's not bad. So, ladies and gentlemen, we are looking at a bullish entry for GBPUSD. We go to AUDUSD, Australian dollars has against the US dollar. Okay, we are on the monthly time frame. We see these are our key zones that we set. Key zones are where price has reacted previously. Historical price action. Price reacted here. There's an expectation that there's a high likelihood that price will react here again in the future. So we just put that downward trend line there. Okay, very good. Wow, you see, it becomes clearer. Good. I love this. Go straight away to the weekly time frame. What do you see? You see price has rallied all the way down. Look at this. Lower lows, lower high, lower lows, lower high, lower lows equal high, lower lows. Now it's broken this trend line, but it's still a lower high. This was, look at this, higher lows, high, lower high. So what's price about to do? This higher low, it's a projection, a prediction, possibility that price wants to go upwards. But those of us who know this market to an extent, who've had some experience in this market, you understand that until price breaks above this level, it's more convenient to set your take profit to this level. If not, price will get here and react and stop you out. So we'll be looking at an imbalance demand zone at this point. We've seen an imbalance demand zone right here. Imbalance demand zone is, it's a demand zone that has not been tested. A demand zone is a point where buyers have found favorable to buy. That's a price that is favorable. It's been favorable for buyers to buy at that price previously. So when price rallies back into that point, it's not been tested before, the buyers will come in again and would buy from that point, pushing price upwards. So this is an imbalance. Imbalance means it's not been tested. From this point, okay, I am in. Good. Imbalance. Oh no, this one. We use the arrow for imbalance. Okay. Oh, I didn't increase the pixel of our arrow. Put it back to 1. Imbalance means from this point to this demand zone, this space down here is called an imbalance. Imbalance. It's not been tested before. Ever since price moved from there, it's not been tested. So there's a high probability that when price will come back to fulfill this zone. Okay. Price will come back to fulfill this zone right here, and by so doing, we'll test this demand zone, which aligns with this downward trend as a retest. And when it tests it, we'll enter our position for the upside. So let's go to the daily time frame. Daily time frame, good. You see, go to, look at this. Go to the with AUD USD, you can take positions in the 4-hour, the 1-hour time frame, because the big values are quite accommodating of such entries. Okay, let's just go to 1-hour time frame to make sure and stop it sure. Okay. Why not 2-hour time frame? Okay, let's not go further. So much for that. Okay, we see something here, and it's interesting. You can still say, okay, I want us to take note of something here. Price broke upwards, broke this level, went up. Now we can say, okay, look at this. Okay, if price breaks below this level, we can, if price comes down, breaks below this level, we wait for it to go up, retest, and then we short the market, take a buy, a sell position all the way down here, down to this demand zone. Okay, so you sell to buy, and when price eventually comes down to this demand zone, you just enter a buy or long position all the way to the top. Forex trading made easy. So ladies and gentlemen, that's our bias for AUD USD. We wait for price to break below this level. If it breaks below this level, wait for it to retrace. It retraces to the upside. When it tests an imbalance supply zone such as this one right here, okay, we will short the market. This is an imbalance supply zone right here. Supply zone. When price gets here, we'll enter a short position. Look at this. Enter a short position. A stop loss above this level. We don't enter this now. okay, because price can rally and just shoot to the upside. We wait for price to break this previous low. When it breaks this previous low, it's an indication that its price is headed downwards. Now wait for the retracement. Wherever it retraces it to, it will create imbalances. It will create supply zones during this move. We wait for the supply zone that ties with the move that had the momentum to break this structure. That's the supply zone would take our positions. So, ladies and gentlemen, thank you once again for staying with us right up until this time. I wish you a wonderful trading week and looking forward to amazing profit making with you all. Have a blessed day until our next session next week. Bye bye. Lions Edge signing out.